Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So today, had a bit of a rally in the price of silver and the price of gold. A small rally, but it was a bit of a recovery following the decline that we've witnessed over the past several days. Now, along with the rally in gold and silver, what we did see was a decline in the US dollar index. Now, for those of you watching on the bottom screen here, this is the DXY, or the US dollar index. That's a measure of the dollar's value against other currencies. And then up top here, we have the silver price. So we're going to get into that. But one of the things I want to note is that when we examine the catalyst behind today's decline in the dollar, it becomes clear that there may be a significant decline ahead, especially this Friday. There are some numbers coming out this Friday that could have a significant impact on the dollar. So we're going to get into that today. Let's take a look at the data released this morning that was the primary catalyst behind today's market action. So we had the JOLTS numbers related to job vacancies and layoffs. That was released earlier today, and this is the headline from Bloomberg. U.S. job openings declined to lowest level since January of 2021. So these numbers were not good. They came in below every estimate. So the Bloomberg economists polled, every one of them was forecasting that there would be more job openings than we actually got. And layoffs rose as well. So this is consistent with signs of slowing demand for workers in the U.S. economy. The numbers that we received were that available positions decreased to 7.67 million from a downwardly revised 7.91 million reading in the prior month. Now remember last month when we got the JOLTS data, it was actually over 8 million job openings, but surprise, surprise, those numbers have been revised lower. That is certainly a trend with this administration's Bureau of Labor. Consistently, these jobs numbers are just revised lower and lower, but nobody really seems to pay too much attention to that. It's always about the current headline. So despite the fact that this was the lowest number of job openings since 2021, it's highly likely that these numbers may be revised lower as well. We talked about this last month when the JOLTS numbers were released, how it was the reason that it was over 8 million, why it was beating expectations back then was a surge in government job openings. So, I mean, one way or another, the administration, the political elites, the central bankers seem intent on manipulating the economic data to appear better than it actually is. And I'm sure any of you who have followed this channel for any length of time or who just are paying attention are very clear that that is the name of the game. Thank you, Art Joe Go, for the super chat, and thanks to everybody for tuning in. Do me a favor, smash the like button, subscribe to the channel. If you want to get more videos like this in the future, click that bell notification icon. Now, let's move on here to what the rest of Bloomberg has to say here. So after July's disappointing jobs figures and a large downward revision to payrolls in the last year, Fed officials and market participants are paying close attention to the August employment data that is due this Friday, especially if another weak report could prompt an outsized rate cut. So let's revisit some of the events over the past month. We got the disappointing jobs figures for July released on August 2nd. And also at the same time, there was a huge downward revision to payrolls for the period from March of 2023 to March of 2024. More than 800,000 jobs that had originally been reported. Turns out they were made up. And now we can look at what happened to both silver and the dollar index on August 2nd. You can see silver was basically flat on the day, but the US dollar index had a sharp drop. And then actually the following Monday, silver had a huge decline. It was down almost 5%, and the US dollar index collapsed. So one thing that you'll note is that the US dollar index and silver, there is a bit of an inverse correlation here, but not a complete inverse correlation. It's not always when the dollar goes down that silver goes up. That is sort of the trend, but on any given day, you can see them trade in lockstep with one another, especially in the event of a big sell-off. Now, this Friday, the jobs data that we're getting, the non-farm payroll report, could potentially send silver lower as well. I mean, that was what we saw on August 2nd. We saw markets across the board were selling off along with the US dollar. But then, take a look at this. If you look from that time period, you had silver bottoming around 2650 or so, and then the dollar index kind of rallied a little bit, but it declined all the way through the rest of the month. And silver was inversely correlated to it. It was rising. Now, recently, kind of the end of August here, starting on August 28th, we've had a decline in silver from close to $30 all the way down to where we're at today, around 28, 26. Yesterday, we were down below 28. And during that time, the dollar was rising. So in general terms, as the US dollar index declines, that is going to be positive for gold and silver. We might get some kind of a panic sell-off here as markets fear recession, and you might see the dollar sell off at the same time. But as a general rule, dollar heading lower is going to be good for gold and silver. I mean, remember, we're talking about a dollar-denominated price of gold and silver. So as the dollar weakens, you tend to see those prices rise. Speaking of silver, today's video is sponsored by sdbullion.com. Right now, they've got a sale on real dollars, not the fake, phony kind that we've had since 1971, or in the case of silver, since 1964. They've got these nice Walking Liberty silver half dollars minted. I'm not sure actually what the last year of mintage from these was, but it's junk silver, and they're half dollars, $1.99 over spot. It's about 6% over the current spot price. This is a fantastic offer, I think. This is something I would be looking at stacking as we head into a season of uncertainty surrounding the Federal Reserve rate cuts and also the election in November. And I think that, junk silver, especially half dollars at these prices today, is a steal. So check them out with the link down in the description. Not financial advice, but I love junk silver. Leave me a comment in the chat if you like junk silver. I think it's one of the best things to stack right now, personally. Now, another thing I want to take a look at is this speech that we had from Jackson Hole, Powell's speech, back on August 23rd. This is where Powell says that the cooling of the labor market is unmistakable because the jobs numbers that are released on Friday are potentially going to have a significant impact on what we get later this month from the Federal Reserve. Now, today's jobs data, today's week JOLTS number, actually sent the probability of a steep Fed rate cut at the September meeting, 18th of September, higher. So yesterday, the percentage chance, or what the markets were factoring in here, the chance of a 50 basis point rate cut was at 38. But following today's release of this jobs data, it is now up to 43. And this makes a lot of sense when you consider what the Fed was saying back at Jackson Hole. Powell basically told us that he is becoming more concerned with the labor situation than he is with inflation, and probably rightfully so. The Fed has a dual mandate, as we know, to maintain stable prices and to pursue full employment. And so the jobs data, which has been thoroughly cooked for years now, representing a much rosier picture of the labor market than exists in reality, by overrepresenting jobs being created, by reporting, consumers being forced to take on second and third part-time jobs as some kind of a miraculous economy. Well, it's all becoming clear what is really occurring in the jobs market now. And so I think that based on Friday's numbers, if we get a weak job report, it may in turn cause the Fed to cut by more than markets are currently pricing in. So that would certainly be good for gold and silver, especially in the long run. One thing I do think that we have to watch out for here is when the Fed makes the announcement that they are cutting, unless it's something much steeper, like say 75 basis points or 100 basis points. A lot can happen between now and the September meeting, so you can't rule that out entirely. But unless something like that happens, we may actually get a bit of a buy the news, sell the fact kind of moment. And it's possible that, gold, silver markets might dip a bit on that announcement as, rate cuts are already largely priced in. So, it might be a good idea to keep some powder dry just in case as we approach that meeting. But we do get later this week on Friday, we get the U.S. employment report. It's going to be out 8:30 a.m. Friday morning. So this is something that investors are going to be watching very closely. Algorithmic trading will be watching very closely. And this could prompt a significant drop in the U.S. dollar index. Now, I'm going to expand this chart of the U.S. dollar index, and I want to point something out to you here. So the U.S. dollar index recently broke through a level of key support. You can see this trend line that goes back to the middle of 2023. U.S. dollar index touched it once, twice. Third time, it blew through that, just collapsed through it. That coincided right around the time of Powell's speech. Of course, August 2nd, this is where we got that terrible jobs numbers. And then this is where Powell was speaking on the 23rd. You can see the dollar index had a big decline there as well. Now, since then, we've had a bit of a dead cat bounce. And again, I mentioned that this kind of correlated to the decline that we've seen in the past several trading sessions with silver. But now, after these bad jobs JOLTS report that we got today, looks like the dollar is resuming its downward trend. And there really isn't a lot of support for the dollar on this chart from a technical standpoint. It looks like a downtrend is clear. I mean, you've got lower highs and lower lows and a breakthrough of critical support. So the stage is being set here. We've got rate cuts later this month. That will likely, send the dollar lower as there's going to be more dollars created, more debt, more borrowing, more credit expansion. That'll be inflationary as well. And also the jobs numbers later this month. I mean, every time we see either the Fed speak about the jobs situation or we get some of these bad jobs numbers, it sends the U.S. dollar index lower. So it looks to me like the dollar is being set up for a significant decline here. And, that to me indicates that gold and silver will likely be the place to be in the long term. Now, again, we could see a decline on the announcement by the Fed later this month, so it's something to keep an eye on. It's also important to note that September, seasonally, a very weak month for the precious metals and a weak month for markets in general. You've got a end of the summer vacation. You've got human traders getting back into the office and participating in these markets. So seasonality is kind of against us here, and that's why I would be on the lookout for more buying opportunities. Premiums remain low on physical bullion. That's good for us stackers. Personally, I kind of like it when gold and silver drop because it's an opportunity for me to buy more, because long-term the picture is very grim for the U.S. dollar, not only against foreign currencies, but in absolute purchasing power and against the precious metals. That is real money. So, I'm still stacking, but keep an eye out. You might get an opportunity to pick up some cheaper gold and silver, and, keep an eye on the dollar and see what happens when these jobs numbers come out on Friday. Now, one last thing I want to take a look at. This is something that Zero Hedge posted 2 days ago, but I thought it was an interesting graphic. And for all of those who are watching who get upset when you see a decline in silver, you see a drop and you say, oh, not another buying opportunity. What is it, Smart Silver Stacker? Another buying opportunity? Well, yeah, that is what I view, that any, daily decline, any noise in the gold and silver market, like yesterday, we got a nice sharp drop. It was a good opportunity to get in. This is the returns for major global financial assets year to date. And you'll notice that the top performing is actually the DJ Stocks 600 Banks Index. And I believe that is a index made up of European banks, something along those lines. So I guess European banks are doing well, but you'll notice that number 2 and number 3 positions here are occupied by gold and silver. So is silver a volatile market? Does it have big swings up and down? Yes. Maybe if you just want the ultimate safe haven play, you go for gold. Me personally, I kind of like how silver, despite the fact that it is the third best performing major global financial asset year to date, it still remains very cheap. And, look at gold. I mean, taking out new record all-time highs on a regular basis these days. Silver is still, sitting at around half, just above half of its record all-time high. And if you're talking about inflation adjusted terms, silver is at like, I don't know, 10 to 20% of its record all-time high. If you take the 1980 high and you adjust it for inflation, you get a number north of $200. So silver remains incredibly cheap, despite the fact that it is performing very well, and gold performing very well also. And basically, I mean, this bull market in gold and silver, you look at the investor sentiment, it's not there. Premiums are low on physical bullion. You know, people are... I read the comments on this channel, and I read the comments on X and other platforms, and the sentiment is just not there yet. There's still a very negative sentiment in many ways towards gold, but especially towards silver. And yet it's the third best performing asset year to date. So what does that tell me? It tells me that this bull run in the metals has a long way to go, and it is just getting started. You know, you look at other factors, the gold to silver ratio, for example. It's close to 90 right now. We can go over to SD Bullion and see exactly what the gold to silver ratio is right now, but it's very, very high. And, you know, that is indicative of an early... Where's the gold to silver ratio? Here we go. Now, 88.07. I mean, if we zoom this chart out, you can see we're definitely near the high end of the chart. This goes back to 1994, and I mean, there have been many times when the gold to silver ratio was lower. There's only a handful of times that it has been higher than it is right now. And I mentioned that, I think it was in yesterday's live stream, and somebody asked me why it is that when the gold to silver ratio rises or tops, it's an indication that gold and silver are very cheap. And the reason being that when gold and silver fall, the gold to silver ratio tends to rise because silver falls faster than gold. It's more volatile, tends to have bigger percentage moves. And then in a bull market, like for example in 2011, you'll notice that this ratio got down as low as 32. That's when silver begins to outperform gold. So that is when you see the metals topping at the end of a bull market. But I mean, we are nowhere near that level right now, despite the fact that gold is at a record all-time high. So that shows you that gold is likely heading much higher, but silver even more so. So anyway, 90% junk silver, that is what I am looking at acquiring at the moment. I see some other folks in the chat mentioning that as well, and I think you are all on the right track. But leave me a comment down below to let me know what you think about the future of the US dollar. You think we're going to get a bad jobs report this Friday? If we do, what effect do you think that's going to have on the dollar and on the possibility of steeper rate cuts? Where do you think gold and silver are heading from here? Let me know in the comments down below. Stay safe and happy stacking, everybody. Thanks for watching. I'll catch you next time. Smart Silver Stacker